Hello traders, can you hear me? If you can hear me, just type yes on the chat, please. I'm going to be starting this show in about 3 minutes. I'm just inviting everybody to join, if you bear with me. A little bit of patience is just what I ask. So, yeah, I will be right back with you. Thank you, David. Thank you, David. I'll be right here with you. I just had to put out a tweet um, to let everybody know that they can join us. There's a lot going on with Brexit right now. We are going to be talking about Brexit. We're going to be talking about the US dollar because the US dollar right now it's at a very key level. Um, and with the premium community, David, I'm pretty sure that you know that we have two pending orders: one to buy the US dollar and one to sell the US dollar, because right now it's at a key level, and we actually don't know if bears are going to be breaking with that level or not, but we're going to go through that just in a minute. All right, I'm almost done inviting people. Um, just need the this copy. Yeah, so everybody, welcome. Welcome to today's Daily Edge. I'm happy to have you here. Um, and yeah, like I was saying before, we've had a very big bullish push in gold. We are still short, of course, but our stop losses have locked in some profits. But I mean, if you have a look right here, this is a big push today, and if we break with this high, we're going to be breaking with the immediate bullish structure, we'll be out. All right, let's start, guys. The tweet is out. And we can start. So welcome everybody to today's Daily Edge. If you just join us, well, welcome. And if you guys know, if you guys are new to the show, well, you can use the chat to ask me questions at any time. I will be more than happy to answer your questions, guys. This is why we're here. You know, we're here to trade together. We're here to learn together. I'm here to share my passion, which is trading, guys. I mean, I eat, sleep, and trade like the like the There's this guy that has this ad that says "Eat, sleep, and trade," which I find very funny. Right. So on today's show, I mean, Brexit negotiations looks very good. I think we're going to be moving forward with a deal. Well, I think I haven't been in the talks in Brussels, right? But it looks promising to have a deal struck between the UK and the EU for later for the the UK Parliament to vote on. There have been some talks about the UK Parliament voting on a non-existing deal. Which doesn't make sense to me. Because what they want to do actually is see if the Parliament would pass what's on the table right now without the deal being complete. So I think that can be that can serve as an opportunity to know if the deal that Boris Johnson is negotiating would pass, but also will give the opportunity to MPs to vote out of spite. So I don't think that that's a good idea, and the only vote that should be on the table is when the actual when the actual deal is on the table. So let's start by looking at the US dollar. But first, let's have a look at let's have a look at the news. Today we had let's see. All right, we had the U.S. core retail sales month over month. They were worse than expected and worse than last month. The actual minus 0.1% versus 0% previous, and an estimate of 0.2%. So very bad numbers here. And the U.S. retail sales month over month for September were worse than expected and worse than previous. The actual number was minus 0.3% versus 0.4% previous month, and an estimate of 0.3%. So very bad numbers here on retail sales on the United States. We also had numbers out of Canada, the Canadian CPI. This is the Consumer Price Index. This is a key number for inflation. So the year-over-year CPI in Canada stayed the same at 1.9%, but is lower than analyst estimates at 2.1%. And the month-over-month CPI, the Consumer Price Index in Canada, was worse than expected and worse than estimates. So not mixed numbers out of Canada. We hadn't had a real reaction out of the Canadian dollar just yet. Let me just eliminate this this trend line. So having said that, why don't we have a look at the US dollar currency index. Now, the US dollar currency index, now let me just I'm going to leave these two squares here because I want to show you what I shared with the premium members yesterday. Right here, right here, this square right here, this is the previous base that was tested on Friday, right here, and is being tested as we speak right now. So this is the make it or break it zone to me for the US dollar. In the short term, of course, I'm talking short term right here. We can see that we are in a short-term bullish structure, right? Testing the lows, and if we don't break with the structure and the 98.80 level, which is the level for a continuation of this bullish move, you can see that this is at the level this is the level that will tell me that we are in an actual bullish run. If we break above it, of course, and if we break below the 98 level, which are these lows, we will be in a short-term bearish market on the US dollar. But the thing is that the immediate level that I'm looking at is the 98.20, which is this base right here. If we break below this level, we will still have the 98 level right here to break in order for us to be in a real bearish market in the US dollar. Now let me just show you the 4-hour chart before we move forward. Let me just I'm sorry about this. Let me just grab the this line because we need that structure that we are currently well breaking out of actually. So the thing is that if we break, if you can see it right here, right? If we break with this level, the 98 level, that would mean that this structure will no longer be valid and that we will be in a immediate bearish market on the US dollar. Just let me show you right here what I mean. If we break below this level, there is absolutely no other level than the 9740, which is this one, for bulls to step in. But the thing is that if we break with this level, we will be making lower lows and lower highs, which will mean that we will be in an immediate bear market. But I mean, we cannot zoom into the 5-minute chart or the 50-minute chart to see what's going on because that's not the way that I trade, that's not the way that I analyze the markets. For the time being, we remain bullish on the US dollar, even though that we have broken with this trend line. But that doesn't mean anything, you know, because I mean, I mean, trend lines are the same as levels, you know. There's no levels are zones. Levels are not an exact number. Trend lines are zones too. But I mean, if we eliminate this bullish structure and we only look at levels, I mean, we can see that we are still very much in a bullish structure, and that here, let's go back to the hourly. Here is where the struggle is. I know this is the daily. Here is where the struggle is taking place right now. And as you can see, let me just put it in the middle like that. There has been a lot of tests by bears of this level, the 98.20, but bulls keep jumping in, protecting it. So what has happened? What has happened is that I'm going to answer Jürgen later on the premium community. What has happened is that with the bad retail sales, the US dollar did not break with this level right here. So I'm expecting a move at least to the daily highs. And if we break with daily highs, we could see at least a retest of the structure for today, at least for this session. Now let's have a look at what has happened with gold. All right, so gold, we are still very much at the same level that we saw yesterday, guys. I mean, nothing has changed. Nothing has changed at all. We continue to be shorts here with our stops above these highs, right? If we break with the, I am not I am not a trader that's going to be moving their stops at every single lower high, because what I concern myself is with key levels, and this is to me a key level in gold, which means that if price breaks with this high, for example, if price goes here and it breaks with this high, to me, this doesn't mean that we are going to be going higher. Of course not. This means that we could be retesting this level. For example, we could be doing this, and we could be retesting this level before going lower, right? But if we break with these highs right here, we are definitely out of our bearish or our short position, because we will be actually breaking above a key level in gold. But for the time being, we remain short biased on this metal, and well, the main reason is because like I said before, we are below some key levels. Yes, a lot of buyers have been stepping in again, and right here when we broke with this with the 1485 again, and right here today we found buyers at the same level jumping in. But like I said before, we do not concern ourselves with daily moves. what we concern ourselves is with bigger, the bigger move. Because I mean, the way that we trade, or the way that I trade, is low risk. I try to find zones where my risk to reward ratios are going to be ridiculous. This means that, for example, this short trade here, my risk was this for a possible reward of this. So this is what I try to I try to find, right? These levels where price might change direction, either continue with the overall trend or trend shift, but that gives me ridiculous risk reward ratios, because I like to trade with low risk and low size, and milk that trade for quite a while. That allows me to control, to have a phenomenal risk control, which means that I don't know. You have seen traders that they take positions with 10 lots and they aim at 15 pips. I mean, to me, that is completely ridiculous, because 2 trades or 3 trades in a row that they lose, they're going to be burning a high percentage of their equity. And in my case, for example, on this trade, I risked about 0.6% of my equity for a more than 1.5% or almost a 2% win. So that is the way that I trade. That is the way that I control my risk, and I think that that is the pro way to do it. And if you're not a premium member and you want to find out my key levels, you can always join us, and I'm leaving you a link below this video where you can just test the premium services out for $25 for an entire month. All right, so this is gold. So levels to be watching. This immediate level has turned into a key level to me. Why? Because this is the level that I will be considering if we move higher to close my shorts. Now, let's move on. If you have any questions. Silver, yes, we can have a quick look at silver, David. Let me just open my layout where I have silver. That's my secondary. Let's have a look at silver, shall we? Silver, pretty much the same, David. You know, pretty much the same as gold. So, I don't know what happened here. Yeah, silver. Pretty much the same as gold, but we are going to have a look at it. Okay. Now, right here, we had an opportunity to short silver, but again, we did not short silver because we were already in a short position in gold, right? And that would mean, I mean, if we, and that's something that you need to understand, right? You have to be biased by one currency or one market. And for example, let's say that right now I'm looking to buy the US dollar, and I find setups to buy the US dollar versus the Swiss franc, to buy the US dollar versus the Japanese yen, to sell the euro versus the US dollar, and to sell the pound versus the US dollar. All of those setups would mean that I will be buying the US dollar, right? So you need to choose one of them to take a position, because if you take all of them, that would mean that you will have quadruple your risk in one currency. And because we were already short in gold, we did not take the short in silver, but it's the same. Now, let me. I haven't touched this silver chart, but just by taking a look, if we move above these highs, I would definitely no longer be a silver bear, and I would be looking to buy at a retest right here. This is pretty much what I have to say on silver, David. Like I said, I haven't touched this chart for a while. I did see this flag but decided to hold on to my gold shorts. So let's move on. If you have any questions, again, just type them on the chat. I'm always looking at the chat on my right monitor. So let's move on. Let's have a look at the pound, shall we? There's a lot going on, but first, well, I'm going to tell you the news because I mean, there's absolutely nothing going on other than let me show you here let me see right here. BBC political editor tweets, just as some in European Union mold the idea of asking PM to get MPs to vote for a theoretical deal before granting him one. That's what I was telling you about. Efforts amongst MPs led by Anna Sowerby not to allow Parliament to sit on a Saturday, that unless a firm deal has been granted. So the UK Parliament is going to be voting this Saturday on a deal, if a deal is struck between the EU and the UK, right? So a deal needs to be struck in order for Parliament to vote on it. Some MPs were playing with or juggling with the idea to have a theoretical vote, right? To see which way the votes would go. Again, another one, RTE reporter says 2 senior EU sources say that the main stumbling block to a deal has been removed, with the DUP accepting the latest proposal on consent. So we are very close to a Brexit deal, and once the Brexit deal is struck, well, the pound is going to fly. Let's have a look at the news terminal. There has been no news on Brexit or other important news here while we were looking at the US dollar and gold. Just some numbers out of Russia on oil output. So let's have a look at the GBP versus the US dollar. All right. Now the GBP versus the USD. So for everybody that has just joined us, when you see on my charts these theoretical moves, these are theoretical moves that I share with my premium members. This means that when price when price dipped to this point, I sent this chart to my premium members with this theoretical move, right? Or this move that I thought the pound would make. And as you can see, well, it was spot on, and premium members that took this position are banking. I myself took it, and the risk versus the reward was very good, and I closed my first half of the position right here. So the pound is still moving up on this good rhetoric around Brexit. But before we go any further, if you're not a premium member, there's a link below this video where you can test our premium services for 1 month for just $25. That's nothing. I mean, I'm leaving you the opportunity to test our services out, right? So I have a question. Is it smart to jump in on the pound? No. I mean, my advice, and this is only advice, I'm not telling you to do to do anything, but it's in my opinion, to jump in right now, and I'm going to show you why I think it's a bad idea, David. Let me go to the hourly chart, and this is why I think that this is a bad idea. Because if you jump in right here, where are you going to be putting your stops? You're not going to put your stop loss right here, because that would be burning money. Why would be burning money? Because you will be trading in a very volatile environment. Let me just get rid of this. This serves no. This has no service anymore in our chart. So you will be trading in a very volatile environment, which means that if news comes out or something or someone in Brussels says that the deal has stumbled and both parties have exited the building, then the pound is going to crash, right? But that can be noise. So if you enter right here and you put your stops right here, you're going to be taken out on a loss on a noise-related move. The smart idea will be to put your stops below this low or even below this low. But if you do so, you would have to target the 130. And to me, the risk... Oops, let me just connect my computer. This happens all the time, and the reason it happens is because when my battery is full, I unplug it. So the smart, the risk that you should be taking is this, and the possible reward is this. So this is not even a one-to-one risk to reward scenario, and to me, that is burning money in the long term. So I wouldn't do it. I'm not advising you to do or to don't or to stay put. This is only what I would do if I weren't in a long position already. Now let's have a look at some targets to the upside. All right, targets to the upside, of course, is the 130. Let me just zoom in on this chart. Right, this is much better. So targets to the upside, of course, is the 130, this big level that we are talking about and have been talking about for a while. Big psychological round number 2. Big psychological number 2, and of course, if we take some Fibonacci targets. If you know me, I only use one fib, and that is this one right here, the 161. And the reason that I use the 161 is because, this is the 161 extension actually. I cheated with the retracement, but I'll use the extension, all right? That's fine. So the reason that I use this is because these are targets. I mean, the 161.8 is a bullish target from a previous move. This means that bulls that jump in here, long-term bulls that jump in here, are going to be looking to take profits out of 161.8 extension, and that is just the way it works. And that's the way that I do it. All right. So if you notice, there's a very big confluence between the 130 level and the 161, and I would be completely taking profits on my long pound versus dollar on my long pound versus dollar position at this level. Why? Because if you noticed on the past, this is where buyers have jumped in, and this is a very big level. Okay, so let's see what would have happened if there is no deal. If that would be disastrous for the pound, and the pound would crash, David, because it's as simple as this. We've been working with a good rhetoric out of these talks in Brussels that a deal is almost there, that MPs are going to vote for a deal this Saturday, etc. Now, if all of this changes without notice, that will bring a lot of sellers and panic to the market, and the pound will crash. I do believe that would crash hard. I can't tell you where, but if that happens, the levels that we'll be looking are the yellow ones, which are my key levels: the 125.25, the 122, the 120, etc. But I don't think that is very likely to happen, David, just because of how good the rhetoric out of these talks in Brussels has been, right? It's very unlikely for this to happen. I mean, given the advances that Bernier and PM Johnson have had until now, and I mean, and what they have given up in order to meet each other halfway, I don't think that there is something that could go so totally wrong that they would drop everything that they have worked for. So, in my opinion, we are going to have a Brexit deal pretty much on this summit. Now, let's have a look at the pound versus the yen. Oh boy. What the fuck? Hello, can everybody hear me? Let's have a look. Let's have a look. I don't know what happened, guys. I really don't. I think I really have no clue what happened, guys. I'm sorry about this. I don't know if you guys can hear me. All right, guys. I don't know if you guys can hear me, but let me see. Well, I'm going to continue. I'm going to continue. I don't know what happened. I really don't. Hold on. Just give me a minute, please. Hello, guys. I'm back. I don't know what happened. I really don't know what happened. I'm sorry about that. Can you guys hear me? If you can hear me, I am back. Let's test this out. I don't know if you guys can hear me, but I am back. I am back. Please type yes on the chat if you can hear me. I really don't know what happened. I think that I pushed something with my foot under my desk. Yep, I'm back. All right, let's continue. I'm sorry about that, and if I swear and if you heard that, I'm really sorry. But I mean, let's continue. Let's move on. Nothing happened, all right? So again, on the pound yen, I was about to talk with not two, but with or two. No, about the pound versus the Japanese yen again. Yesterday, I took profits. Right here again on the pound versus the yen, I have a very, very, very small long position still here. All right, let me just see. Okay. All right, and I have moved my stops to this level. All right, to this level right here. So let's move on and let's have a look at what levels I am targeting to the upside on the pound versus the yen. And the reason that I haven't closed my entire position on the pound versus the yen is because of a Brexit deal about to be struck. Okay, so let's move and let's have a look at the hourly, at the daily, and the real level that I'm targeting is the 141. All right, the 141 is going to give us such an extreme target. Profit that this is the definite target, and as you can see, it's my 161.8% retracement. My extension of the first move up. So yeah, basically I'm expecting to have a 161 target at the 141. All right, that would give me on my long position a 1000 pip win for a 100 pip risk, and that's a 1 to 10 risk to reward scenario on one single trade that I have milked all the way up. All right, if you want to have the trade levels in real time, join us on Premium. There's a link below where you can test our premium services out for 1 month for just $25. So let's have a quick look at what's going on with the dollar right now. As you can see, the dollar is dipping. Let's make it thicker. The US dollar is sinking right now, and it's very probable that it's going to be breaking with the lows. So yeah, short-term US dollar bulls are going to have trouble here. And for you premium members, don't worry, we have positions, or we have orders to buy and to sell the US dollar, and we are going to be deleting one of them. And you already know which orders they are, so there's no need to say anything about it on the public, on this public lesson. So let's have a look at the US dollar, Canadian dollar. Right, again, if you remember yesterday, we were talking about this missed opportunity right here, which is fine, but the level that I'm looking at is the 131.40 to 131.30, which are these lows right here. There's nothing too much to say about the US dollar versus the Canadian dollar, other than we are trading inside of a range, and that I'm going to definitely be a buyer at this level right here, because it gives me the opportunity to have a very good risk to reward scenario on a short position on the Canadian dollar, which is long on the US dollar, Canadian dollar, right? Let's move forward. Let's move on. If you want me to watch, or if you want me to see another market, just let me know in the chat. I am here for that. US dollar, Swiss franc, the US dollar versus the Swiss franc. Interesting, very interesting that, hold on. All right, the US dollar versus the Swiss franc. We are still trading inside of this flag, guys. I mean, this is in my eyes, this is the pole of the flag. This is the flag, and we are waiting for this breakout to happen. We already have our orders placed in. If you are a premium member, you know what I'm talking about. And we are patiently waiting for that breakout. If you want to have these trade levels or trade idea levels, there's a link below this video where you can join us for just $25 an entire month. So nothing much to say about the US dollar versus the Swiss franc, other than big level here at parity being rejected, and we are waiting for this. We're waiting for this breakout patiently. There's nothing much more to say other than right now it's untradeable, and you should definitely just wait for that breakout if you're going to be trading the US dollar versus the Swiss franc. All right. After that big move on gold, you can see that we have found some bears alongside to help us on our short position. There's really nothing more to say about gold, the US dollar, other than watch for that 98.20 level, because this is where buyers, or this is the levels that buyers are, well, protecting. The US dollar versus the Japanese yen, last market that we're going to be looking at right here. The US dollar versus the Japanese yen. Yesterday I told you guys that yeah, this was a big level, or key level to me, and that I was already long from these lows in the US dollar versus the Swiss franc, and that I had taken a short position to hedge my bets, right? That is pretty common, you know, because we don't know if this level is going to hold and the bears are going to break with structure. We don't know that. So the only thing that we can do is prepare for a given scenario. So I prepare for that by maintaining my long positions and opening a short position right here. So I was long and short at the same time, and I got taken out on a loss on that short position, but what I lost on the short position, I made with the breakout. So I moved my stops to below this low, and I continue to be long biased on this currency pair, and I am targeting the next key level, which is this one right here. Hold on, let me just show you. This one, the 109.65. This is my target, my ultimate target for these longs. After that, what I will be looking for is a dip to this key level, the 108.42, for a continuation, at least to these highs, right here. So let me put on again this key level around the 112, or the 112, I'm sorry. And this is my long-term view on the US dollar versus the Japanese yen. Why? Because we have broken with this key structure right here that we were trading in. We tested. This was a very technical long position that I took, guys. I mean, we broke above it and we retested the broken structure before going higher. I mean, the same setup. This is the same exact setup that I shared with you, premium members, on the pound. Let's have a look at it again. All right, let's have a look at it again. The pound, we broke above. All right, we broke above that bearish structure and retested that bearish structure on a key level before we move higher. Same setup, same exact setup. I mean, trading is not something that it's not magic or something that is really hard. You just have to understand and look for what works for you in order for you to be successful, and just apply it over and over and over and over, right? I know what works for me, and that's what I do. All right, we have been live for about 45 minutes, guys, so I'm going to be taking off right now. It was very nice to have you here. Again, thank you for joining me, and I'm leaving you a link below this video so you can test. So you can subscribe for just $25 for 1 month to our premium services. I mean, it's excellent added value. You are going to be getting everything that you see here and even more, because you're going to be getting my trade levels to the second. You're going to get premium only analysis. You get access to me every single one of my trading sessions, etc. So I will be live again tomorrow. I do this every single day. If you want me to look at some other markets, whenever I'm live, just type it on the chat and I will be more than happy to do so. But for the time being, these are my levels. This is what I will be looking for. Stay safe out there, and I'll see you guys tomorrow. Goodbye.